Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Sebastian, Chief Operating Officer over at Option Pit. We're going to take a look at movement in VOLQ, or the Nasdaq-100 Volatility Index, as well as some product coming out that you can trade daily options around. Mark, it's great to see you as always. Welcome back to Trade Talks. And I think over the past week or two, we've been so fixated on what's happening with the midterm elections, the blow up in the crypto space. But there's been some interesting activity around the way volatility has been trading. In fact, when markets were trading higher, VIX and VOLQ were also creeping higher. What are your thoughts around that?
Yeah, we saw things. We saw VOLQ show some strength right into that massive move that we saw on Thursday, the 10th. That was just a giant move. We've now seen implied volatility really start to come off today. VOLQ still well above its lows from August, but starting to pull back. What's interesting is that this is aligning with movement in the Qs, in the S&Ps, really being off the charts in terms of a realized volatility perspective. And that points toward markets maybe pointing toward some slowing of all this volatility we've seen over the last 2 months, basically since August. The market is kind of signaling that implied volatilities and options could be coming off a decent amount over the next few weeks as we head into the holiday season.
Right, which is typically a seasonal strong time of the year for the markets anyway.
Yes, it is. And we've got I think some really interesting levels in some names. I'm watching the chip names. The big level I've been watching in a lot of stocks is, are they going to break their pre-pandemic highs? We did see that happen in some of the chip names. One name like AMD, what traded below its February 19th, 2020 level, consolidated there, and then has since taken off. That's been a level that is kind of where Amazon has moved itself back to, and Google, even Microsoft and Meta have kind of moved back toward that level. Not Meta, where Microsoft has moved toward that level. So we see a lot of consolidation around that level. I think markets have to make a decision here over the next couple of days. Are they actually gonna take off and head toward their 200-day moving average, or do we turn around here over the next couple of days, maybe PPI since it's lower, or some other bit of news? But overall, markets appear to be aligning for lower volatility.
And Mark, let's talk about some new product that's been introduced. We have the Nasdaq-100 NDX daily options that have been introduced. How do you see options traders leveraging these daily options? Perhaps leveraging is not the right word. Utilizing these daily options within their strategies.
Yeah, it's pretty exciting. So, the SIBO began trading dailies and SPX about 5 months ago. We've seen volumes explode there. It's now the NDX has now been added, and now we're starting to hear that Invesco is gonna and the Nasdaq is gonna add daily trading in the Qs. And I think that is going to be twofold. One, you could see some exacerbation of moves intraday. So how we move on a day-to-day basis, we've already seen that this daily option volume does exacerbate intraday movement. However, I think that people were wondering, hey, why is VIX and VXN kind of acting the way they're acting while the market was selling off? And the answer is these daily options. These daily options, which don't go into that calculation, except for via, tangentially, you have to do some math. They are dampening the effect of these volatility indexes, because I'm now able to put on a hedge for PPI tomorrow, or for any event that is coming up on that actual day of the event. So we've got a Fed day on a Thursday. I can trade a QQQ option on that Thursday and hedge myself directly, rather than using a volatility option or having to use the monthly. So these dailies, I think that we are going to have to see some reconfiguring of these volatility indexes to take that into account. We could see these short-term volatility indexes that got played with several years back start to come to the forefront as short-dated options really start to steal volume from the standard monthly options and longer-dated options.
So, Mark, is this a good or bad thing for the options market, or is it not a zero-sum sum game scenario. It's not, it doesn't have to be good or bad.
I think it's a net good. Anytime you're giving a trader flexibility, that is a good thing. Now, is this going to lead to some silly speculation? Of course it will. But for the market as a whole, I think the flexibility to set my hedge when I want it on the day that I need it is a massive gain for money managers, hedge funds, investment houses. So I see it as a huge win for the industry as a whole. It is one where it is going to be massively additive. And while maybe taking a little bit of volume away from some longer dated, the net gain is going to be so much bigger. So I think it's a huge win for the options industry.
All right, good. Encouraging to hear. Thanks, Mark. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.